Imagine it's July 1997. You've got $1,000 sitting in a savings account earning almost nothing. Your neighbor mentions some tiny company selling books over the internet, a word most people barely understand yet. You'd probably laugh. The stock market feels like a rich person's game, and this company hasn't even made a profit. Its founder is a former Wall Street guy running the whole operation out of a garage in Seattle. Nobody thinks this thing survives 5 years. But today we're rewinding the clock and tracing exactly what happens if you bought Amazon stock on its very first day of trading. By the end of this video, you'll know the exact number. And I promise, it is not what you expect. Let's set the scene. May 15, 1997. Amazon.com is 3 years old. It sells books, just books, shipped out of a warehouse with a website that looks like a school project by today's standards. The company has never turned a profit and openly tells investors it might not for years. Wall Street is skeptical. Some analysts call it overpriced. Others call the whole idea of buying things online a passing fad. Bookstores like Borders and Barnes and Noble dominate the market and see Amazon as barely worth worrying about. And yet, on this day, Amazon sells its shares to the public for the first time, priced at $18 each. With your $1,000 at $18 a share, you could have bought roughly 55 shares. Not exactly a life-changing purchase in the moment. Amazon's total value on day one is about $438 million, tiny compared to the retail giants of the era. Most people who did buy weren't making some genius calculated bet. They were curious tech enthusiasts, early internet adopters, or employees who believed in the mission. Nobody, and I mean nobody, was calling this a guaranteed winner. That uncertainty is important to remember, because the next few years are going to test anyone's nerve. Here's the thing people forget. Amazon almost didn't make it. The late 90s dot-com boom sends tech stocks soaring on hype alone, and Amazon rides that wave upward through 1998 and 1999. Then, in March 2000, the bubble bursts. Dot-com companies with no profits and no real business models collapse overnight. Amazon, still unprofitable, still spending heavily to grow, gets caught in the panic. Analysts openly question whether Amazon will go bankrupt. One famous research report even nicknames it Amazon Bomb. The stock, which had soared above $100 a share, begins a brutal, prolonged fall. By late 2001, Amazon's stock bottoms out at around $6 a share, a loss of over 90% from its peak. If you'd been holding those original 55 shares, watching your investment shrink that dramatically, ask yourself honestly, would you have sold? Most people did. Fear, panic, and years of bad headlines pushed countless investors to cut their losses and walk away for good. This is the moment that separates the story we're about to tell from the story that never gets told, because the people who sold here never found out what came next. Amazon doesn't collapse. Instead, it quietly restructures, cuts costs, and focuses on becoming more efficient. By 2003, the company posts its first full-year profit. Slowly, painfully, confidence returns. Then in 2005, Amazon launches something that seems almost unremarkable at the time. A membership program called Amazon Prime, offering free 2-day shipping for an annual fee. Critics call it an unnecessary expense. It turns out to be one of the most important customer loyalty moves in retail history. Amazon isn't just selling books anymore. It's becoming the store for everything. In 2006, Amazon makes an even stranger move. It starts renting out its own computing infrastructure to other companies. This division is called Amazon Web Services, AWS. At the time, almost nobody outside the tech industry understands what this means. It sounds like a side project. It is not a side project. AWS eventually becomes the backbone of a massive portion of the modern internet, powering everything from Netflix to NASA, and turns into one of the most profitable divisions in Amazon's entire empire. The online bookstore has quietly become something far bigger. Through the 2010s, Amazon's growth accelerates dramatically, expanding into electronics, groceries, streaming, smart home devices, and cloud computing all at once. Along the way, the stock price climbs so high that Amazon executes several stock splits, dividing each share into multiple shares to keep the price accessible to investors. If you held your original 55 shares through all of this, through the crash, through the doubt, through a decade of reinvention, those shares would have multiplied many times over through splits alone, before even counting the price growth. Now here's where the math gets almost hard to believe. Adjusting for every split along the way, those original 55 shares purchased for $1,000 in 1997 would today represent well over 1,300 shares. At recent trading prices, that stake is worth well into the hundreds of thousands of dollars. Some calculations, depending on the exact date measured, put it past the $1 million mark. Let that sink in. $1,000. A bet nobody was confident about, on a company that came within a hair of collapsing, held through a 90% crash and years of ridicule, turning into a sum most people will never save in their entire working life. To put that in perspective, that same $1,000 in a typical savings account over those same years would be worth barely more than it started with, even with interest. The difference isn't just luck, it's time, and the willingness to hold through terrifying uncertainty most people can't stomach. That's the uncomfortable lesson here. It was never obvious. It never felt safe. The people who held on did so through years of being told they were wrong. So here's the real question this video leaves you with. What's the Amazon of 2026, sitting in front of you right now? The thing everyone's dismissing, that you're not sure is worth the risk? If this kind of financial history blows your mind, subscribe, because next week we're calculating what would have happened with a very different bet. One that went the other way. See you in the next one.